Hey, this is Mac with PriceActionTradingSystem.com, and it is Tuesday. It's January 14th, and this is my second take on this chart lesson. I did the whole chart lesson. It was a long one. It was 30 minutes. I talked about some different things, got done, and there's absolutely zero audio on the whole video. So, a mistake on my part. I had disconnected my wireless microphone to plug something else in temporarily and forgot to plug my microphone back in. And just out of habit, I picked it up, turned it on, started recording, and wasted 30 minutes of my life there. So I'm going to do this again. I almost just wanted to close it up and go home. But since I'm leaving Friday and going to be gone for 3 weeks, that I felt like I needed to do a chart lesson today. So uh, I'm going to do it. I'm going to rush through it this time. It won't be quite what we would have got the first time, and I apologize. I did want to real quickly before I get going here. I told you I would be back, I thought, on the 3rd in the office, but I'm cutting myself short of my vacation by a week, and I won't be back in the office till the 10th. So we come back. It's basically a 3-week trip. So I won't be back into the, I won't, we come back the weekend of the 8th. I come back on a Saturday. And so I'll get a day break there on Sunday, and then I'll be back in the office on the 10th, February the 10th. So I apologize I'm going to be gone so long, but again, this is a trip of a lifetime. I mean, how often you get to go to Antarctica? And so I can't turn this trip down. The timing was not great with it just coming back from the holidays. And I've already been out 2 weeks in December, and this will be 3 weeks in January and February. And it's a long time to be gone, and I don't like being gone that long, but again, it's an opportunity of a lifetime for me, and I'm not going to turn it down. So anyway, let's get to the chart lesson because I don't want to spend another 30 minutes just doing the chart lesson. So you can see it was a mixed day. This is today's bar, the red bar. It's after 5. It's almost 6 o'clock now. So this we've started into the next day. So just ignore that. But you can see just a mixed day. We traded much lower. We traded much higher. And we closed in the middle where we traded a lot today. So it was a crazy, wild, volatile day. And the trading was somewhat matched that. So anyway, let's flip over to the 2,000 tick chart, and I'm going to move through them really quickly. I apologize, but it's just the way it's going to have to be today, just to get a chart lesson out. But let's flip over to the other chart. Okay, here's our chart, and you can see that it was mostly sideways until about 10 o'clock, and when the bottom dropped out, we traded lower, and then we just rocketed straight up. Went sideways again for a little bit, rocketed straight down, and then we chopped our way back up, back into the middle of the range again. Crazy, crazy day. Um, there was some important news this morning. It's already fallen off the list because it's so late in the day. But there was PPI news, core, I think core PPI, which is all to do with economy. And this is why I tell you to be flat before that stuff comes out. You need to be flat 5 or 10 minutes before it comes out. It came out at 7:30 today, and then I'd be flat for at least 5 minutes or until it settles down, whichever comes first. And so after about 5 minutes, it kind of settled down today. Uh, but this is why you want to be flat because, I mean, look at that bar. 128 ticks in one bar. And if you would have had to been short here, there's no reason to be long yet. So you'd have to be short when that news came out. And that's what you don't want to get trapped in because there might be a lot of slippage. It might go so fast that you get a lot of slippage. And you might have been deep in profit here and gave it all back and even give it back plus some. So just be flat before this high volatility news comes out. Sometimes it's a dud and you say, oh, I should have stayed in. But it only takes one time like this to burn you and you'll learn your lesson. So there's the reason I tell you to be flat. There's a reason I make sure I'm flat. And because if you don't, it's going to catch up to you. But anyway, market rockets up and back down. And so it's after 7:30 before you can take your first trade. There is a second entry long here, but you're still really looking for prices to go lower. So I don't think you want to go long there. And then you actually get a second. So now you got to close outside, a move down, and there's the second entry actually triggers here, so this is not necessarily a second entry. You're just it's a good signal bar, and it's so far away from the EMA, it's probably time for it to go back. You're better off to wait on the high or low. That's why I marked this green, which that comes here, and the signal bar is no good, so no trade there. Then you have two legs up and a closeout side and another short here, and I think this is a third entry short too. But it's just so congested. Let me zoom in a little more. That's just so congested that you're better off to wait on this lower high. And the only way you could trade this one would be on the engulfing bar. It breaks higher and fails and turns down. And that's mostly green. So you could go short there, and that's more advanced. 99% of you should just ignore those engulfing bars. Don't try to trade them. You need to be experienced. You need to be profitable. And if you're learning, just skip them because you're just going to lose money. You're going to set yourself back. But you might enter that on the engulfing bar. Otherwise, leave it alone. And you do get a triple test down here, but the signal bar is no good. It just chops its way back up. But notice you get a close outside, two legs up, and a second entry short at a double top right across there. And you can see that low's lower in this one, so you got to count a 0, 1, 2. That's a second entry short. It's only good for a scalp. And you get another second entry here, but it's an engulfing bar, and you can't enter on an engulfing bar on that one, and you don't want to go short way down here, I don't think. But because you got a double top there, that's a new high. You try to go higher once, twice. So there's a failure on a continuation pattern off that trend line. And there, look at there. You're not going to see many bars like this in the volatility, but it even fits you can even get in that trade using the 8-tick rule. That's probably the only time today that could have happened, but there it is. Boom. And it turns out to be a nice move. You might get a runner there. And then you get another second entry here, but you don't have a close outside this trend channel. You do, but it's all in one bar, and there's a good chance it's going to push higher one more time, and it does, and makes a new high, and then gives you a big bearish bar. So that would be where I would go short right there. And it runs down here and it tests these lows, but you don't know. I mean, it's kind of right in the middle of this low and that low, and so there's no consistent lows down here, so you can't really trade that one. There's no setup there anyway. But if you get a higher low, maybe you take that, and you do get a higher low right off this, and that the low of this range actually coincides with the low or the close from yesterday. That's what that dashed line is. You can kind of see underneath there. So that would have been a great place to go long, but the signal bar is no good, and boom, off it goes. And it just rockets off. And you don't get a chance to enter that one. Now you might say, hey, there's a reversal pattern here, but it's not. It's over here, and that doesn't set up properly. Now you do have a new low here, and you try to go short once, twice. The reason I think I counted this one, you can't really trade a continuation pattern failure there. But the reason I marked this one is there's a hidden second entry there. And if you see that, maybe you take that. It's a little risky. Maybe you take it. And you could have entered on the engulfing bar because it is mostly red and it breaks lower and turns up. So if you took that one, it's green, but maybe you might take it. And of course, you do have a new low there, and so you get a first entry. And notice you got the close outside, so you get two legs up to a new high, and you get a second entry short with a nice signal bar way away from the EMA. So I like that one. I marked it green because you're better off to wait on the lower high, which comes here, and the signal bar is no good. And you're just moving down, and then suddenly you get another second entry, and it confirms that trend line. Nice signal bar. That's a perfect second entry to go short. You get another one here, but the signal bar is no good. It's a little sideways and congested. And then it bounces down here. And you could probably argue that we've tested this line enough times across here that, hey, maybe a bounce there. You might try to go long. The problem is you don't have a break of this khaki channel yet. So I marked it green, but honestly, I think you're better off to skip it. And of course, it runs up. You get a close outside, a new high. Um, it's just a first entry, so you probably want to wait on a lower high or a second entry, and that comes right here in a nice signal bar, and it takes it a minute, but it drops on down, and then we break lower here. It closes back inside, but it's just I think you need a higher low there. You don't know. I mean, you've got a trend channel here. Um, that looks like two swings and a confirmation, but one more touch probably would confirm it, and that comes here. And there is a hidden second entry here, but I still would probably sit tight on that trade because there's not much room between here and there, and it could bounce. Let me see how much. Well, there's enough to get out there. You might argue for that to be green. I think you're better off to wait. And you actually get a breakout pullback short here. Now, normally I do not like breakout pullback shorts. They're the least reliable pattern we have. But you got this channel here, and we just confirmed it here. And now we've tested the support resistance, and it's acting as resistance. And normally I'd want to see it test that more than once before I'd trust it. But in this case, it looks like we're going lower. We're making lower highs and lower lows all the way down here. And so if there's enough room to scalp out before that low right there, take that trade. I think you're probably okay to take. I did mark it green. It's not perfect setup, but if you understand what's going on there that I just described, maybe you take that one. Now, this turns out to be a really strong trend. So any other signal bar, once you realize it's a strong trend, which is probably down in here, any other signal bar that comes back to the trend line, maybe you take it. There's one. That's a signal bar, but it doesn't qualify. And then we bounce off the lows. Close outside. There is a second entry long here, but I think it's too early to go long. So just see if we come back to the trend line and you get another setup. And of course it does. You get a close outside here, move to a new high, and you get a close outside of the main channel up here. But that's just a first entry. I'd want to see if you get a lower high or a second entry or something. And you do get a lower high, but it's moved too far. You get a second entry here, but you got two inside bars before it triggers. Not a good setup. And then we drop down here. We're working sideways. There's no setups in there. It's too tight. There's no. We finally move to two legs to a new low, and it reverses. And you would expect we might get a reversal here. And somebody asked me about a short right here. Now, we've already got a break of the main channel and a new low in place, and we got a break of this khaki shorter term channel and a new low in place. So once you've got that break and new low in place, at least two legs down, every other setup is suspect unless you can come up with another trend channel. And you can't do that right here. And plus you need to draw your trend channel up as well. And so even doing that, you don't qualify for a short there really. So I think it's way too risky to go short this late in the move. And you may take the reversal since it closed above. If it's supposed to be above the EMA before you can enter. Usually you want it to bounce off the EMA, so it's not ideal either. I marked it, but I marked it green. I think you're just better off to wait. And this thing runs up. You get a close outside, new high. And so maybe you go short again right there, being that far away from the EMA. But I think you're better off to wait on the lower high, which comes here. Now, that's moved a long way, but we're so close back, I still think you can qualify that on a volatile day as a lower high. And there's a hidden second entry in there too, and a very bearish bar, so maybe you go short there. I like that one. And then it just reverses. But again, I don't think you can buy it. That is a second entry long. Actually, it's not. I take that back. It breaks higher right there, and so it's like a third entry long. I think you just have to skip it regardless. And notice what happens here. You get this big fast move up, a first entry, and then another move up, and a second entry. It bounces right off the key entry point, right off the EMA. It gives you a very bullish bar. That's a reversal pattern, failed second entry short. And I like that one. And then here again, I just marked these because they're signal bars. You can tell this is a strong trend again. Maybe you wouldn't know by right here, but by the time it gets here, you can tell this is a strong trend. If you just any signal bar that comes back to the key entry point, um, that qualify, the signal bar has to qualify as well. Maybe you take them, and you can see if any one you took worked. There's 1, 2, 3, 4, 5, and 6 if you count that one. Until finally you get a close outside, you get a first entry, second entry, but no setup, no trigger. Comes back. Um, Maybe you argue there's a triple test there, but no setup. You get 2 legs up, no setup. Comes back. And now you got at least a triple test, but again, no setup. And then you got a trend up, close outside, new high, and you get a triple test there. And now you got a good signal bar. So I like going short there. I don't know if you get a runner on this one. You'd be lucky if you did. And there's not even a good signal bar to enter. I mean, it's just the bottom falls out of it. It's just like everybody decided, oop, that rally was wrong. We should have never bought all this, and boom, off it goes. And you get a close outside that khaki channel, a couple legs down, and you get a double. This bar is higher than these two, so you pretty much have a double bottom and a higher low right here. It's not ideal, but maybe you take that trade. That looks congested. And you see they do come back. People aren't certain. So it comes back and tests it again, gets a triple test, and it holds. Now you can go long. You still don't get much out of it, but you get a scalp out of either one of those. And then finally, you get a second entry long here. Notice the new high runs down, close outside. It tries to make a new low, but confirms the trend line instead and triggers. It gives you a second entry long. And again, that didn't really take off. It would have worked, but it didn't really take off. There's a second entry here on the closeout side, the first break of the channel, but not a good enough signal bar. And this is just the first entry, and that takes you into 230. And so, crazy wild day, very volatile. So it looks like the volatility is coming back. I have no idea what to expect tomorrow or the next day. Maybe when Trump comes back and maybe after the inauguration, January is usually a good month, bullishly type months is our first of the year, and we're not seeing that this time. But there's just so much negativity hanging over the markets with interest rates. We thought they were lowering interest rates. They thought they had inflation under control. Now they find out they don't. And so I think I've said all along, I never thought it was time to lower interest rates, and I think that it's all smoke and mirrors, and they're just trying to keep the market propped up before to go through the election, and now that the election's over, they don't care. So we'll see. Just that's the beauty of being a day trader, though, is that we don't carry anything overnight. So you don't get caught with these wild swings that open, you close in the money and open and your account's wiped out plus some, those kind of things. And that's why we pay lower commissions for day trading, because we don't get trapped like that, because we're in and out, and we don't carry our trades overnight, which is where the danger lies when the market's closed. So anyway, I'm going to wrap this one up. Like I said, this is the second time I've done the video. I hate I had to rush through it that time, but I think we still covered it all. But anyway, we'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.